Australian house prices are falling at their fastest rate ever. And there's no signs that these declines will stop. In fact, we might be just getting started. So could the golden Australian housing market actually experience a real crash? I'm Biko Konstantinos, and that's what we're going to talk about today. Please give this video a like to help me out with YouTube's algorithm. And whether you own property or you're renting, the housing market has a massive impact on your life. So subscribe to my channel because I'll keep you up to date on all the big stuff. So how bad's this housing crash gonna be? From the house price peak, prices have fallen 8.1%, but it's not the same across the major capital cities. As we can see, Sydney's fallen 11.9%, Melbourne 7.5%, Brisbane 8.5%, but both Adelaide and Perth at this stage have seen very little decline. So at the moment, all the declines are being led by Sydney, Melbourne and Brisbane. So when did these declines start occurring? Well, what would you know? Pretty much directly after the RBA raised interest rates. That's a real shock. It's now blatantly obvious that the huge boom seen since COVID was predominantly due to the ultra cheap money, or in other words, dropping interest rates to zero. All this managed to do was put a rocket under house prices, and Phil Lowe's forecast not to increase interest rates till 2024 just added fuel to the fire. But since here in May, we've actually seen 8 interest rate hikes. And an 8% drop in house prices across the major capital cities is not insignificant, and just could be the start of the biggest housing crash Australia has ever seen. But obviously that's impossible because Australian house prices just don't crash. Our philosophy is borrow as much as you can, buy as many properties as you can, and then just cash in on the crazy capital gains caused by so much demand, which has come about from extremely generous housing taxation policies, or in other words, major benefits for holding property. Now we can't have some pesky little housing crash destroying 30 years of extremely above average house price gains. Can we continue to artificially inflate house prices year after year after year? Personally, I don't think so. Something has to give, and we're starting to see that with the crazy rental crisis. And if you don't think it's an issue, check out this hilarious video from Juice Media, which perfectly articulates the Australian housing crisis. Link in the description below. Now regarding interest rate hikes since the 1980s, our current tightening cycle is super sharp. We can see in 94 interest rates were raised by 2.75 very quickly, but we've now just experienced a 3% rise in 8 months, taking the official cash rate from 0.1% to 3.1%. Now I've mentioned it before that our interest rates are actually quite low compared to our historical average, but now that Australia's household debt has ballooned so high, smaller interest rate hikes actually have a greater effect, which is why interest rates can't actually go too much higher, or we could see a major property collapse. And that level could easily be around about that 4% official cash rate, because that would take mortgage rates to about 6.5%, which could actually result in a housing and economic collapse. And I think both the government and the RBA understand that. The Australian housing market is now a house of cards that just couldn't hold up if interest rates were higher for longer. One very interesting factor is we saw that fixed interest rate mortgages balloon when interest rates hit rock bottom. Now many of those fixed rate mortgages taken out during the pandemic will be expiring in 2023. So that's why many people haven't really been impacted so far by the interest rate hikes. But come 2023, when they have to remortgage at a much higher rate, we'll start to see the full impact of higher interest rates. And that's when house price declines could actually accelerate. Now let's have a look at the median value of houses across Australia. Sydney, 1,025,000, miles in front of everyone.
The winner is Sydney, Australia.
Melbourne 759,000, Brisbane 715,000, Adelaide 649,000, Perth 560,000, Hobart 684,000, Darwin 510,000, and Canberra 869,000. So there's massive discrepancies between capital cities, with Sydney median value above 1 million and Darwin half of that at 510,000. Now there was also a lot of difference between how much house prices rose during the recent boom, with Brisbane and Adelaide both rising more than 40%, which is extremely unrealistic, unsustainable, and part of the wider housing affordability crisis. But the real surprising stat here for me is that Melbourne only rose 17.3% during the entire post-COVID boom, and they've already fallen 7%. So the reality for Melbourne is that prices could easily return to pre-COVID levels. And that's because house prices in Melbourne rose nowhere near as far as in other states. Another stat to highlight is that Adelaide has yet to see any significant decline. So while both Adelaide and Brisbane saw the biggest house price rises, Brisbane has already come off 8.1%, but Adelaide's right still up there at its peak. I don't know if that's sustainable, but so far the demand for houses in Adelaide is keeping prices at that elevated level. Alright, so house prices have fallen 8.1% in 6 months, but where to from here? Interest rates are definitely getting towards the peak of their current cycle, so the RBA will soon pause to see what the effect is going to be on the wider economy. But does that mean house price declines have finished? Not necessarily. Every single rate rise means less borrowing capacity, so buyers just aren't able to offer as much as they previously were. The current buying capacity is around 70% of what it was when interest rates were near zero. We mentioned that many people will be coming off their fixed rate mortgages in 2023, so their mortgage repayments will jump up dramatically, so their disposable income will reduce dramatically. So both of those factors will continue to put downward pressure on house prices. So I'm expecting further declines across 2023, but there's something else that could have a dramatic impact, and that's housing policies. For quite some time I've been talking about a potential shift in housing policies because there seems to be a bit of an uprising occurring against housing policies that only seem to favour property owners and ignore renters. And you can see this by the many calls to scrap negative gearing, abolish or reduce the capital gains tax discount, freeze rents, tax vacant properties, and clamp down on schemes like Airbnb. So if we see higher interest rates for longer combined with an overhaul of housing policies so they're not so generous to property owners, then we could actually witness a housing crash in Australia. I know, it's blasphemous to even mention it. And I would class an actual housing crash as house price declines of 20% or more. I'm Biko Konstantinos.